Welcome to the deep dive. Have you ever looked at a company's financial report and just wished someone could cut through all the noise, just, distill the really interesting bits, find those aha moments, maybe hiding in plain sight?
Yeah, get straight to the point.
Exactly. Well, that's our mission today. We're diving into the latest from Salesforce, global leader in customer relationship management, CRM.
Right.
We'll be digging into their recent Q2 FY26 earnings, their Form 10Q filing, trying to give you a clear picture, financial health, strategy, where things might be heading.
And we've got the source docs, the earnings presentation, the detailed 10Q, lots to unpack.
Definitely.
And what's really fascinating, I think, is how these documents aren't just about what the financial results. They really peel back the layers on the why.
The strategic decisions.
Precisely. The choices driving a tech giant like Salesforce. We'll try to connect those numbers to their evolving story, especially their big bets on AI. So as we go through this, maybe think about what jumps out to you as critical for any company trying to navigate this really dynamic tech landscape.
Absolutely. Okay, let's kick things off with the financials. Where Salesforce stands right now.
Okay.
Founded back in '99, right? Now a powerhouse, connecting businesses, customers, all on this unified platform. Data, AI, trust, that's their mantra. So Q2 fiscal 26 that ended July 31st, 2025, they reported total revenues, get this, over $10.2 billion.
Wow, okay.
Yeah, that's a pretty big jump from just over $9.3 billion the same time last year.
So strong growth continues.
Definitely. Pushed their first half-year revenue past $20 billion.
And if you break down that revenue, I mean, it really shows the core of their business, doesn't it?
You mean the subscription model?
Exactly. Nearly 95% of that quarterly revenue, of about $9.7 billion, came from subscription and support.
Right.
That's the consistent recurring income. Recognized over the contract term, it really speaks to how stable that core business is.
So predictable income, mostly.
Yeah. The other 5%, maybe $546 million, that was professional services. Implementation, training, that sort of thing. But it's clear where the main engine is.
Okay, so the subscription model is definitely king. But I'm curious, is this growth happening evenly everywhere? Or are there, specific regions doing better or worse?
Good question. Because, the overall picture is strong, but the regions, it's a bit more nuanced.
Okay.
So in the Americas, bookings growth actually picked up speed. Went to 9%, up from 7% the quarter before. So good momentum there.
Right.
EMEA, Europe, Middle East, Africa brought in a solid $2.4 billion. That's 7% growth. But interestingly, that was actually down a bit from 9% in Q1.
Okay. A slight slowdown there.
Yeah, slight. And then APAC, Asia Pacific, held steady. Strong 11% growth, same as the previous quarter.
And where was the main strength geographically?
Seems like Q2 was really anchored by the U.S., the Netherlands, and Switzerland. They specifically called those out.
Got it. Any currency impact?
A little bit. Foreign currency gave about a 1% positive bump to total revenue for the quarter. Not huge, but, it adds up.
Okay. And net income, how's the bottom line looking?
Improving significantly. Diluted net income per share jumped to $1.96 for the quarter. That's up from $1.47 same time last year.
That's a healthy increase.
Yeah. And for the first 6 months, it was $3.55, up from $3.03. So profitability is definitely trending up.
Most companies focus on that top-line growth, the revenue number. But what I find really interesting here is how Salesforce is also getting leaner.
Right, trimming the fat.
Exactly. They're not just growing revenue, they're tightening their belts. Operating expenses as a percentage of revenue, they actually shrank.
Where specifically?
Sales and marketing dropped from 35% to 34%. General and administrative went from 8% down to 7%. Small changes, but
They add up across billions in revenue.
they do. But here's the real kicker, I think. The restructuring charges.
Yeah, from last year's workforce reductions and all that.
Right. They plummeted. Just $4 million this quarter. Compare that to $99 million in Q2 last year.
Wow. That's a massive drop.
It really is. It suggests that whole probably painful organizational overhaul, it's mostly done.
So they're past the major surgery, so to speak.
Yeah, kind of like emerging ready to run without crutches. And that financial discipline, that leaner operation, it puts them in a great spot to fund this big AI push they're making.
Precisely. That lean operation, it's not just about saving pennies. It's about fueling the future. Right?
Totally.
These healthier finances are exactly what lets them make these really aggressive multi-billion-dollar moves in AI.
Which brings us right to their strategy.
Yep, their strategic vision. And it's all about AI right now.
It absolutely is. Let's pivot to that. Those big strategic bets, you look at their earnings call, their reports, AI is everywhere.
Unmistakable.
They're talking up strong momentum in data cloud, this new thing called Agentforce, and just broader AI across the board. Huge investments in generative AI, agentic AI.
Can you unpack Agentforce a bit? It's relatively new, isn't it? Introduced Q3 last fiscal year?
Yeah, it's this new layer they're building onto the platform. The idea is, well, imagine AI that doesn't just like suggest an email reply,
Okay.
but AI that actually does things, resets a forgotten password automatically, issues a refund without human intervention, maybe even schedules a follow-up call proactively.
So moving from insights to autonomous action.
Exactly. That's the Agentforce vision. AI that automates entire business processes. That's a big leap.
And if you connect that to the bigger picture, I mean, these aren't just product features. They're making massive strategic plays, acquisitions to really own this AI future.
Like Informatica.
That's the huge one, yeah. Pending acquisition, announced back in May 25, AI-powered enterprise cloud data management.
Data management, crucial for AI.
Absolutely the lifeblood.
Yeah.
That deal's valued at roughly $8 billion, expected to close maybe Q4 this fiscal year or early next.
And how are they paying for that? $8 billion is a lot.
Combination of new debt and cash on hand. It's a significant investment, but they clearly see data management as foundational for their AI strategy.
Then it doesn't stop there, does it? I saw another acquisition mentioned.
Right, they're not putting all their eggs in one basket, but it seems focused. They also announced buying Regrello, August 2025.
Regrello, what do they do?
AI-native business process automation. About $900 million in cash for that one. Expected to close this quarter, Q3 FY26.
And how does that fit in?
It directly fuels that Agentforce vision we were just talking about. Accelerates their roadmap for AI agents that can, actually do stuff.
Makes sense. So Informatica for data, Regrello for agentic AI.
And there's more. They also committed up to $750 million back in July 25 for a strategic investment in Genesys Cloud Services.
Genesys, customer experience platform, right, cloud-based AI.
Exactly. Funding for that is expected this fiscal year, too. So you see these moves, Informatica, Regrello, Genesys. It's about bringing in critical tech and talent.
Accelerating innovation, expanding their ecosystem.
In a very targeted way around AI and data.
You can really see how it all ties together. It's not just random shopping. And speaking of talent, what about their own workforce? Are people sticking around through all this change?
Seems pretty stable, actually. Their attrition rate was around 8% as of July 31st. That excludes the Slack self-service side, but still, 8% is pretty healthy for tech.
Yeah, that's not bad at all.
And that stability, it's crucial for integrating these new companies, for maintaining that core subscription revenue we talked about earlier. It all underpins the strategy.
Right, you need the people to make it all work.
Definitely.
Okay, so the growth looks good, the strategy seems focused on AI, but let's talk about how they report these numbers, because you always see GAAP and non-GAAP, right?
Yes, the accounting fun.
It can be confusing, but it's important. So GAAP, generally accepted accounting principles, that's the standard. But Salesforce, like a lot of tech firms, also uses non-GAAP measures.
Things like adjusted earnings per share, operating margin.
Exactly. They strip out certain things like stock-based compensation or acquisition costs. And management seems particularly proud of their non-GAAP operating margin guidance.
They raised it, didn't they?
They did, up to 34.1% for the full fiscal year. They argue it gives a clearer view of the underlying operational efficiency, how the core business is really performing.
And it's insightful, I think, to look at both. These different lenses give you a fuller picture,
How so? What do the cash flow numbers tell us, for instance?
Well, net cash from operations for the first half of the year was $7.2 billion. That's actually only up about 1% year over year, so fairly flat.
Okay.
And free cash flow, which is operating cash minus capital spending, then actually dipped a bit for the quarter. $605 million, down from $755 million last year.
So cash flow isn't booming quite like revenue?
Not in the same way this period, but context matters. They still ended the quarter with $15.4 billion in cash equivalents, and marketable securities.
So plenty of liquidity.
Definitely. Gives them that flexibility for the big investments, like Informatica.
And it's not just cash on hand today, right? What about future business already locked in?
You're talking about RPO, remaining performance obligation.
Exactly. Explain that a bit.
Sure. RPO is basically contracted revenue that they haven't recognized yet. Think of it as, like, Salesforce's guaranteed future income already on the books.
Okay. And how's that looking?
Very strong. Total RPO was almost $60 billion, $59.9 billion, up 12% year over year.
60 billion.
Yeah, it's a huge backlog. And the current portion, CRPO, what they expect to recognize in the next 12 months, that was also up 11% to $29.4 billion.
So that $60 billion number, it's a really strong signal of future stability, isn't it? A lot of growth is kind of baked in already.
Precisely. It provides a buffer against market ups and downs, shows the strength of those long-term customer contracts.
Okay, that makes sense. Now, besides just growing the business, how is Salesforce returning value directly to shareholders? They seem pretty focused on that too.
Oh, very much so. Two main ways. Share buybacks and dividends. In the first half of fiscal 26, they bought back about 18 million shares. So at $4.9 billion doing it.
Okay, significant buyback.
But then, just recently, in September 2025, the board authorized an additional $20 billion for share repurchases.
Another $20 billion on top of what they already had.
Yep. Brings the total authorization up to a massive $50 billion.
Wow. That's a huge commitment.
It signals a lot of confidence from the board, doesn't it? And then there are dividends.
They're paying those consistently.
Yep. Paid out about $801 million in dividends in the first half of the year. And they just increased the quarterly dividend slightly to 0.41 cents per share, up from 0.40 cents last year.
So buybacks and dividends, they're clearly balancing growth investment with returning cash to shareholders.
Exactly. It shows a maturing company, but one still very much in growth mode.
Okay, let's shift gears a bit. Let's talk about maybe the less glamorous side, the practical realities, the challenges of running a global tech giant like this.
Right. The underlying currents, operational stuff, legal risks.
Exactly. Operationally, I mean, they rely hugely on third parties, right? Data centers, cloud providers like AWS or Azure, hardware, software vendors.
Any disruption there can have ripple effects.
Big time. Impacts service delivery globally. And their business, it has a clear seasonal rhythm.
Q4 is usually the biggest.
Yeah, historically strongest for new deals, renewals, which then makes Q1 the biggest cash flow quarter as those payments come in. You have to understand that seasonality when looking quarter to quarter.
Good point.
Also, something interesting operationally. They just implemented a brand new ERP system, Enterprise Resource Planning.
The backbone systems.
Yeah.
It's always a huge undertaking.
Huge. Happened in Q2. And it meant significant changes to their internal financial controls. Never a small thing for a company this size.
No, definitely not. And this kind of brings up the question, what are those less obvious but still really significant factors they have to navigate, like the legal stuff?
Yeah, the 10Q mentions a few things there.
It does. There's that ongoing Slack litigation, class action lawsuits related to Slack's registration statement before Salesforce bought them.
That's been going on a while, hasn't it?
It has. Multiple appeals, even went up to the Supreme Court. Right now, it's paused, waiting for some federal action to resolve, but it's still hanging out there.
And there are some more serious allegations, too, weren't there? Related to a former customer.
Yes, unfortunately. Salesforce is a defendant in several lawsuits connected to providing CRM software to a company called Website Technologies that was an affiliate of Backpage.com.
Ah, right.
The plaintiffs allege Salesforce facilitated sex trafficking through its software used by Backpage. Those cases are moving forward. One trial is actually scheduled for June 2026.
Wow.
So these aren't just, minor legal squabbles. They highlight some really heavy ethical and legal responsibilities that come with being a major tech platform.
Yeah.
Huge potential impact on reputation, trust, not just the bottom line.
Absolutely. And beyond these current lawsuits, what about new risks? Especially with this huge push into AI, that must open up a whole new can of worms.
Oh, completely. And the 10Q is pretty explicit about the AI risks. It's a major area of concern.
Like what specifically?
Well, accuracy bias, toxicity,
Yeah.
privacy, security, data provenance. Where did the AI learn its stuff? Big questions around generative AI.
Right, what if it spits out something totally wrong or something biased or copyrighted material?
Exactly. If their AI creates inaccurate info or harmful content or infringes copyright, Salesforce faces, serious reputational damage, competitive harm, potential legal liability.
So it's not just build it and they will come.
Not at all. It requires massive ongoing investment in compliance and governance frameworks, in rigorous testing of these AI tools before and after release. It's a constant process.
That sounds expensive and critical.
It is. And layered on top of that is just the constantly shifting regulatory landscape. More rules. Always more rules. Cloud computing, AI services specifically, cross-border data transfer. Think GDPR in Europe, CCPA in California, now the EU's AI Act coming online.
And rules for specific industries, too.
Yep, like Doro in Europe for financial services.
Yeah.
All these evolving regulations can really impact how easily customers adopt new services.
Yeah.
They increase compliance costs, create potential liabilities. It's a minefield for a global company.
Okay, so AI risks, regulatory risks, anything else major jumping out from the risk factors?
Well, there's the risk tied to their strategic investments. They have a portfolio of over 400 investments in other companies, mostly private, some public.
Wow, 400 plus
Yeah, carrying value around $5.1 billion. But those investments come with risk, right? Potential for partial or even total loss of that capital. Market volatility can hit their operating results if those investments sour or need impairment charges.
So another layer of financial complexity and potential volatility.
And sometimes, the operational reality gets down to really specific agreements with executives.
Like what?
The 10Q details things like a consulting agreement with Brian Millham. He provides, I think, up to 3 days a quarter for CEO support, leadership transitions. His equity keeps vesting, mostly.
Okay.
And there's an aircraft time-sharing agreement with Marc Benioff. Salesforce can lease an aircraft from him, paying specific costs, but Benioff retains operational control.
Interesting. Why mention those details?
It just illustrates the kind of detailed governance and transparency required in these large public companies.
Yeah.
So executive relationships are carefully structured and disclosed.
Got it. Okay, one last area. What about the broader stuff? ESG, environmental, social governance? How does that fit in?
Salesforce definitely emphasizes it. They talk about equality, sustainability as core values. They publish a big annual stakeholder impact report, but they also acknowledge the risks. Evolving ESG regulations, conflicting standards, potential criticism from stakeholders if their practices don't meet expectations, or if their reporting isn't seen as robust enough.
So another area requiring constant vigilance.
Absolutely. Public and regulatory expectations there are only going up.
Okay, so wrapping this all up, what does this mean for you listening in? I mean, we've seen Salesforce balancing really impressive growth.
Fueled by that strong recurring revenue, yeah.
And this newly lean operating model, they're using that strength to make these aggressive AI acquisitions.
But at the same time, they're juggling some complex legal issues, navigating this evolving regulatory minefield, especially around AI and data.
Right. So their deep dive into AI, this focus on efficiency, shareholder returns, it really shows a company trying hard to proactively shape its own future, doesn't it?
I think so. They're positioning themselves right at the forefront of AI, but also trying to strengthen those financial foundations and, thoughtfully address all these complex challenges. It's a compelling story.
Innovation and discipline management in a really complex world.
Yeah, that sums it up pretty well.
So, as Salesforce keeps pushing ahead with AI agents, expanding globally, maybe the critical question for all of us investors, customers, observers is this. How do companies balance that relentless pace of tech advancement, that promise of growth, especially in AI, with the just as pressing demands of, ethical development, keeping up with regulations, and just maintaining trust with everyone?
It's the central tension, isn't
And
it?
it really feels like it. It's not just about the numbers on the page. It's about the broader impact, often unseen, that these innovations have on business, on society. What's the next big challenge they'll face? And how ready are they, really, to lead the way through it? Something to think about.